But is that money working for you? Just letting it sit in a savings account is not enough. With inflation, the value of your money slowly goes down over time. This means that what you can buy with your money today, you will not be able to buy in the future. That is why it is so important to make your money grow. You want your money to make more money. This is how you build real, long-term wealth. This is how you secure your future and can afford the things you want and need. There are two main ways people try to grow their money in the stock market: investing and trading. Many people think these are the same thing, but they are not. They are very, very different. It is like the difference between planting a garden and hunting for food. One requires patience and time to let things grow. The other requires quick action and constant attention. Understanding the difference between investing and trading is the first and most crucial step you must take. It will help you decide which path is right for your money, your goals, and your personality. You cannot make a smart choice if you do not have all the facts. So, let's talk about these two paths. We are going to break down what it means to be an investor. We will also look at what it means to be a trader. I want you to see the real picture, the good and the bad of both sides. By the end of this, you will have the knowledge you need to look in the mirror and say, I know who I am, and I know what I need to do with my money. You have to be honest with yourself. This is your financial future we are talking about, and you cannot afford to get it wrong. Let's get smart about how you can make your money work as hard for you as you work for it. The goal is to create financial freedom for yourself. It is not just about getting rich quick. It is about building a secure foundation so you do not have to worry about money later in life. Whether you choose to invest or trade, you are taking an active role in your financial well-being. This is a powerful step. But power comes with responsibility. The responsibility to learn, to understand, and to make choices that are approved for you and you alone. Let's start this journey of understanding, so you can make a decision that you will be proud of for years to come. Investing is all about playing the long game. Think of it like planting a small tree. You buy a good strong sapling, you plant it in good soil, you water it, and then you wait. You are not expecting to have a giant oak tree overnight. You know it will take years, maybe even decades, for that tree to grow strong and provide shade. Investing is exactly like that. You buy a piece of a solid, well-run company, what we call a stock. You do your research and believe that this company will grow and become more valuable over time. You are not buying it to sell next week or next month. You are buying it to hold for many, many years. Let's use an example. Imagine you believe in a company that makes electric cars. You have seen their cars on the road. You like their vision for the future. And you have read that their sales are growing every year. So, you decide to buy some shares of that company's stock. Your plan is not to watch the stock price every single day. You plan to hold on to those shares for the next 5, 10, or even 20 years. You believe that as the company grows and sells more cars, its value will increase, and so will the value of your shares. This is the core idea of investing, buying and holding for long-term growth. The key to successful investing is patience and discipline. The stock market will go up and it will go down. There will be scary days when it looks like you are losing money. An investor does not panic and sell. An investor remembers why they bought the company in the first place. They trust in the long-term potential. This strategy is called buy and hold. It is about having faith in the quality of what you own and giving it time to mature. This method has been used by some of the world's most successful investors, like Warren Buffett, to build incredible wealth over their lifetimes. It is a proven, steady path. The benefits of investing are powerful. One of the biggest is the power of compounding. This is when the returns you earn start earning their own returns. It is like a snowball rolling down a hill, getting bigger and bigger over time. Investing also tends to be less stressful than trading because you are not reacting to every little market move. However, there are risks. Your money is tied up for a long time, so you cannot access it easily. And of course, there is no guarantee that the company you choose will do well. That is why diversifying or buying into many different companies is so important for an investor. Now, let's talk about the other side of the coin: trading. If investing is like planting a tree, trading is like surfing. A surfer does not wait for the perfect wave years from now. They are out in the water every day, looking for the next big wave to ride. They get on it, ride it for as long as they can, and then jump off before it crashes. A trader does the same thing with stocks. They are not interested in a company's long-term future. They are focused on short-term price movements. They want to buy a stock, watch its price go up a little bit, and then sell it quickly to make a small profit. They might do this many times in a single day. A simple example of trading would be this. A trader notices that an oil company's stock price often goes up in the morning and down in the afternoon. So, they buy 100 shares of that stock at 9:30 a.m. for $50 per share. They watch the price closely. By 11 o'clock a.m., the price has gone up to $51 per share. The trader immediately sells all their shares. They have made a profit of $1 per share, or $100 in total, in just 90 minutes. They are not concerned about what the company will be doing next year. They are only concerned with that short-term price swing. This is the life of a trader. Buy low, sell high, and do it fast. Trading requires a completely different mindset. It is a high-stress, high-attention job. Traders use complex charts and technical analysis to try and predict which way a stock's price will move next. They are glued to their computer screens, watching the market tick by tick. They have to make split-second decisions to buy or sell. There is no room for emotion. A trader must be disciplined enough to cut their losses quickly if a trade goes against them. Holding on to a losing trade in the hope that it will turn around is a recipe for disaster in the trading world. It is a game of speed and precision. The main advantage of trading is the potential for quick profits. A successful trader can make a lot of money in a very short amount of time. It also means your money is not tied up for years. It is liquid and can be used for the next trade. However, the risks are huge. In fact, most people who try day trading lose money. It is incredibly difficult to correctly predict short-term market movements consistently. It also comes with higher costs, like more frequent brokerage fees, and higher taxes on short-term gains. Trading is not a hobby. For those who succeed, it is a full-time, high-pressure job. So, the big question is, which path is right for you? The answer depends entirely on you. It depends on your financial goals, your personality, and how much time you can dedicate to managing your money. Ask yourself, are you trying to build a retirement nest egg over the next 30 years? Or are you trying to generate a second income right now? Your goals will point you in the right direction. Long-term goals, like retirement or saving for your child's college education, are a perfect match for investing. Short-term goals, like trying to earn extra cash this month, are more aligned with trading, but you must understand the risk. Think about your personality. Are you a patient person? Can you handle seeing the value of your account go down without panicking? If you can buy a stock and forget about it for a year, you have the mindset of an investor. Investors are comfortable with delayed gratification. On the other hand, do you thrive on action and constant engagement? Are you disciplined, analytical, and able to handle high levels of stress and risk? Do you have the time to watch the market all day long? If this sounds like you, then you might have the personality of a trader. But you must be brutally honest with yourself here. For the vast majority of people, Investing is the smarter, safer, and more approved choice. If you have a day job and a family, you simply do not have the time to become a professional trader. Investing allows you to participate in the growth of the economy over the long term, without it taking over your life. You can set up automatic investments into low-cost index funds or ETFs and let your money grow steadily over time. This is the path to wealth for most people. It is a strategy that is built for real life, not for a movie about Wall Street. It is the people's path. In conclusion, you must choose the strategy that fits you. Investing is about owning a piece of a business and growing with it over many years. It is slow, steady, and has a high probability of success over the long run if done correctly. Trading is about profiting from short-term price fluctuations. It is fast, intense, and very, very risky. Look at your life, your goals, and your stomach for risk. Do not pretend to be a trader if you are an investor at heart. For most of you, the answer is clear. Be an investor. Plant your money tree. Be patient and watch it grow into the financial security you deserve. That is a plan that is denied to no one.